Hey everyone, Scott Valens here with the Mortgage Broker Podcast powered by the Mortgage Marketing Animals. And today I have an awesome guest with me, my buddy Evan Wade. We've gotten to know each other a good bit over the last few years. Evan's the co-founder, CEO, president, probably all of those titles, CTO as well. I know you're a big tech guy of a brokerage, mortgage brokerage, Epoch Lending. What's up, Evan?
Thanks for having me. Nothing much going on. Just enjoying the perfect September weather here in Philadelphia before it starts getting freezing.
I know today is mint, right? We're here in Brooklyn and walked outside this morning and I'm like, come on, can we have this for like 3 months?
It's not gonna
Wishful
happen.
thinking,
Yeah.
right? Totally. Well, let's dive in. So today, the subject matter that there's no better person to dive into with me than Evan is we're going to go through four misconceptions of the broker channel within the mortgage space. What are myths, misconceptions out there when people think of the mortgage broker channel and they don't love it like Evan and I do? So we're gonna go into those. But before we do, Evan, just give me a quick background. Epoch Lending. I know you've been running a shop for a while. Tell me a little bit about it. And we can then dive
Yeah,
into our stuff.
sure. So I am in my 15th year of being in banking and mortgages. Got my first job as a part-time seasonal teller at TD Bank when I was 19 years old. Then I closed my first mortgage the year after that. It was just part of my job. I was a customer service rep, CSR, as they called us. And I had no training in mortgages whatsoever. They gave us a 1 day class. Like they called it, I can't even remember what they named the class, but it basically taught you how to take an application through MortgageBot, the online POS, and the difference between a conventional FHA, VA, and USDA loan. And they were like, go sell mortgages. So this was in 2009 when we're just coming out, starting to rebuild from the Great Recession, of course. So it was that first kind of refi boom, and they didn't have a sales force, so they had the genius idea of throwing a bunch of CSRs out to do mortgages, and that's just not the way I can sell any product. I'm not a natural salesperson whatsoever. The only way, I'm good at selling something is knowing more about it than anybody else does. So I went on the company intranet, found, my all the company guidelines and all that. And I basically read it cover to cover, structured loans by hand, like on a notepad, because they didn't give us access to an LOS either. So I was doing like DTI on like a notepad
Nice.
and a calculator on my phone. So I had basically no training, for the first few years. And then I wound up, basically coaching other people to make the whole region better at mortgages, essentially. So, fast forward a few years later, I, became a full-time loan officer in 2015. And really got to understand what it's like outside of the banking world, and what we do every day, both in retail and in the broker channel. I'm an entrepreneur at heart. My parents are were small business owners. They just sold their business a couple of years ago. Both of my grandfathers were small business owners, so it's really all I know. The 6 years I worked for TD Bank, and then the few years I worked for other mortgage companies. Just I was always itching to get out there and do something on my own. Even longer than being in the mortgage business, I've always been a bit of a nerd, for no other better way of explaining it. I learned the basics of HTML in like 6th grade. My brother and I were building computers at 10, 11, 12 years old, that kind of thing. And I'm lucky enough now to be my brother actually works with me at our
Oh,
company,
cool.
and we're building Epic OS together. So it's kind of like a big full circle kind of thing. So it's really exciting. because
So we're going to talk more about that in a little bit, but Epic OS
yeah,
is like a branch of Epic Lending, or no? It's a
it's
completely
actually
separate
going
business,
to
but
be, yeah, it's all falls under the Epic Financial Group
okay.
umbrella of like the main company. So it's a wholly owned subsidiary of that entity. Obviously, the initial intention was to build technology for myself and make my business more efficient. But I, through the last 4.5 years or so of being in the broker channel, I'm like, one thing I became really, really good at is helping other brokers with advice and consulting, and it's all been free. Like I've never charged for it, or people buy me beers here and there as a thank you, but that's about it. And I never felt like it was something I should charge for. But obviously the technology, I will be charging for that, so that will
Totally.
come down the pipe. But yeah, well, it's basically we'll talk more in detail about it obviously later, but it's supposed to really help. It'll kind of feed into the myths that we're about to talk about, the broker channel of where a lot of people are like, I don't want to manage a mortgage brokerage. I don't, that's too overwhelming, that kind of thing. Everything involved in that. So that's essentially what Epic OS is out there to solve for, and I'll get more into detail on that in a bit.
Cool. Awesome. Thanks for that intro. So let's do it. So let's dive into these misconceptions. I'll throw them out there to you. I'll kind of lay up some lobs for you, and we'll break down what our opinions are, our counter arguments are. So first one, drum roll, please, is that as mortgage brokers, we don't have control, right? We don't have control. We don't have access to, our underwriters aren't in-house. They're at our lenders. We don't have control. We don't underwrite the files because we're not direct lenders. So seems to be a pretty big misconception. What would you say to that?
It's my favorite misconception, because it's the most false misconception I think out of all of them, out of the broker channel. Hey, I worked for a retail lender that is one of the best companies in the entire industry in terms of fulfillment and operations, and they were great. I went into the broker channel and it was better than that. So if that's not a good, if that doesn't show you that the broker channel has better control over the process, I don't know what does. It's pretty simple at the end of the day. Every single wholesale lender is competing for our business.
Yep.
If they don't have a good process, a good fulfillment, we're not going to send them business. And we all talk to each other now. There's a community. So, the Provident Fundings of the world that are a nightmare to work with, a lot of people don't send them business anymore because they know that ahead of time, and they don't have to find out on their own like you used to as a broker, because we all talk now. And totally. Lenders are very protective of that. And I've seen a lot of lenders get better because of all that feedback out there, the feedback loop, essentially. So
totally.
I think that we've got the most control of all. And like every single lender that we have, like you got email, phone number, the underwriter, like your account manager, your AE, we have AIM escalation process for, AIM partners that, if all else fails, you have AIM jumping in and helping on your behalf. So you have more resources and control than ever before. And I feel like it's only going to get better and better from here.
I think you nailed it. I was going to say as well is that, no underwriters are in the office next door to anyone anymore. This has become a virtual industry, whether you're a small little mortgage broker or a huge mortgage bank. It's spread out. Ops centers are in parts of the country away from sales. So no one's going next door and knocking on their underwriter's door. And even if you are, like you said, it maybe used to be the case where there were, guards in between, like we couldn't necessarily get right to the underwriter, but everyone's had to level up in our channel. And so, like you said, we have direct access to every single underwriter and every file we work on. Phone numbers, there's no gatekeepers. That was what I was looking for. And beyond that, really, with control comes controlling where our file goes, right? And so with technology, listen, none of us are fans of starting a file with one lender and then moving it, right? We're not in the business to do that. No one really wants to do it. But the beauty is that with technology and the speed at which we can take a loan package, realize it's not working at a particular lender and move it to another, and in 24 hours have a loan commitment. To me, there's no better control than having that control beyond just, talking directly to an underwriter on a file,
Yeah, and one thing I forgot is that there's a lot of the wholesale lenders, at least the ones we work with, the underwriter calls us.
Yeah, right.
On conditional approval. And not only do they call it, like they're required to. It's not even optional. Like it's within that wholesale lender's procedures that they have to call the broker. And if you answer that phone,
right?
UWM's a perfect example. I mean, like, so I know I'll never forget my COO at my other mortgage brokerage that I started in early 2018, Philadelphia Mortgage Brokers. Our COO there is like, I take every phone call that comes from that underwriter at initial approval. Because he's like, if I get a loan that has like 10 conditions on it, a lot of times I'll be able to strike off, anywhere between 3 and 5 conditions because I just explain the situation and, on that call. So you're not even getting that conditional approval letter yet because you're getting all that stuff struck off before, and then you get a nice clean approval letter in the mail or in the email to work with.
Yeah, it's a great example. I think, the takeaway is our industry, our channel is completely leveled up in this category, and the flexibility that we've always had as independent brokers to work with who we want, just, I think, kind of elevates us as far as control. So I agree. I think that is a misconception that I feel like we've successfully beaten down.
Yeah, and I'm all about competition. So, when you have that true competition, everybody levels up. And it's like, at the end of the day, retail lenders know, and this isn't meant to be a knock on retail by any means, but like they know that the loan officers that work for their company have some level of captivity to their company. They don't, no loan officer, even there's a lot of them that do change companies pretty often. Nobody actually wants to change companies. It sucks. It's not fun. So, that's the one thing I love and always talk about with the broker channel too, is that like when you change your NMLS ID to a broker, you are basically opening it up to 70 different options. Now, I'm not signed up with that many lenders. I know there's a lot of brokers who do sign up with as many. Just doing all those broker packages gives me anxiety. But you do have, so like when one sucks, you just move to another one like that, and you don't have to change your NMLS sponsorship to do that. Like that to me is independence and freedom.
Sure. Totally. Cool. All right. We did it. All right. Misconception number 2, that we have really clunky loan processes, or like our loan process is clunky, right? Do I need to elaborate, or do you get that one?
No. And yeah, I mean, so, the one thing about coming into the broker channel is really no different than retail in that it really depends on, if you're starting your own company, obviously you're responsible for building all of that stuff, hiring your own team, building out your own workflows. If you're going to use, some kind of process management software like, Monday, Asana, something like that. Yeah, it's on you to kind of set that up. There's no like real out of the box solutions out there. I mean, we do have, we use Arrive as our LOS, which in my really strong opinion is the best LOS and POS for originators in the entire industry. Doesn't matter what channel you're in. So, they've got all they got some workflow tools in there as well. But yeah, I mean, as far as all of that, it does really kind of land on you. So, and there are broker shops that you would go to and they're like, also you may not own it, but you join one and they're like, you're on your own. We're just going to collect like a small file fee or something like that. And you get to keep the rest, but like every expense is on you and the entire process is on you and you're just left to your own devices to figure it out. So of course, when you join one of those shops, there's a certain element of truth to that you're going to feel overwhelmed. Things are going to be clunky, all that, but there's tons of companies out there, mine included, where we've tried to foster that kind of centralized operations, and we're all distributed throughout the whole country too. We're licensed in 19 states, but day one I set up Slack, and we use Slack for internal communication, and it's not optional either. Like new people come on board, and even, some people that are on my staff now are resistant to it. Like, especially like, I guess the people that aren't as comfortable with technology, they're like, it's confusing. I don't get it. It's like, you got to learn it then, because like, we don't communicate internally through email. We just don't do it. And I think that creates efficiency, and it allows people to be able to communicate with each other in a more efficient way. My buddy who also owns a broker shop, Andre Munar from Collab Lending, he actually has all of his inside sales and operations people sit on a Google Meet call all day long. So they're on mute, they're working, doing all their work, but like, if they have a question, they just unmute themselves and raise their hand. So they actually do have that in-office environment set up, so they don't feel like they're isolated out there. So the thing about, I guess, about the broker channel is it's kind of like it's like a clean slate for you to kind of build your own systems and processes and all that. And I guess that could be a little overwhelming for some people that might be familiar with a retail lender where everything is containerized for them. But I've also found that a lot of times you don't have control. Like, you can't issue disclosures when you want to, you can't do that, you can't order your own COEs on VA loans, like stuff like that. So that's where I feel like, we do get more control, and that can be a little overwhelming, learning all those different systems that you might not have even had access to in the past.
Totally. And I think another point around this misconception is that there are a lot of companies out there in the retail space that have the ability to broker loans when a loan needs to be brokered. But those loans are typically kind of fringe loans, whether they're non-QM, they don't fit the clean, conventional clean bucket. And so they're going to lenders that are not the best representation. They're brokering them out to lenders that are not the best representation of what our process and our flow is all about. So they're saying, oh my God, we broker to this lender when we have these kind of tricky deals, and boy, does it suck. Well, two things. First of all, you're not going to dial in your experience with that lender because you only broker 1 out of 10 loans. So you're not going to spend time refining your process when brokering. And second of all, there's a reason you have to broker that loan, because you can't do it in-house. So, certainly share more, but I think I run into that all the time. It's like, I get it. If I sent every loan to that lender, I would agree with you. This is a clunky process, but
exactly. I'll never forget a LO on. I think she actually works for a bank, like a depository bank. She was like, I brokered a loan to, or I did a brokered loan, and she's like, it was a nightmare. So why would I want to, get into the broker channel and deal with that? I was like, well, what lender was it that you used for that? She was like, Carrington. I'm like, no
Sorry,
wonder.
Carrington.
Sorry, Carrington, but I mean, like, that's their reputation, and I'm sure that they embrace that too. Is like, they do those dirty loans, and it's, they'll go down to that 500 FICO. It's not going to be pretty. So. But I'm like, you don't need, you as a bank, you've got underwriters on staff. You can't even, BM's not even gonna let you sign up with them. So, you don't get access to lenders like that. I don't think Windsor allows, other depository, because they are a subsidiary of a bank. But I don't think that anybody that is brokering is getting access to, those really good process wholesale lenders that we have access to. So
I think we nailed it. It's not a clunky loan process by any means. It's very smooth most of the time.
And I'm sure, if you close 10 units a month with Carrington, I'm sure even them you could build out a great process and get loans done smoothly and all that. It's just that most people don't do 550 FICO FHA loans.
Right. If that's your bread and butter, then you and your team are getting organized around that and getting kind of dialed in on all the guidelines, what, you know, when it can be a manual underwrite, when it can't, what, how many derogatories, 12 months, 24, right? Like most of us
Exactly.
that don't do those loans, we try to fit one in and it's a bad experience because we don't know the guidelines. So totally. Let's move on. Number 3. So we kind of touched on this before, I think, but it's a separate one. Lack of internal support. So forget the lenders, forget our wholesalers. We got UWM, Home Point, Windsor, all these lenders that have just, you know, been so dialed in and have gotten so much better over the last 3 to 5 years and are just incredible lending partners. Forget about them. What about the internal support? Oh, you know, mom and pop small broker shop, like they say they're going to process my loans, but then I find myself just processing my own loans because they're not investing in infrastructure and support and all that. So what do you say about that?
Yeah, I mean, if you're going to join an existing brokerage, obviously, just like you joining a different retail lender, you want to do your due diligence. How do they do their processing? How do they provide support for, system issues and all of that kind of stuff? Like you want to dig into how they do things and make sure that you're not going to be kind of left out in left field by yourself, because that is out there with a lot of broker shops, and a lot of the biggest broker shops out there are that way. It's like, yeah, we're going to pay you more than you're going to make anywhere. In some cases, you might double your pay from what you were making in retail, but if you do any kind of production, then you got to worry about getting a processor. You got to worry about, potentially getting an LOA and all that. And what kind of support are you going to get in that sense? So it definitely might not make sense for that $50 million a year producer to become a broker and join a broker shop that has no support for you. Like, you're going to want to join a shop like mine, where I wanted to create more of that retail experience, quote unquote, or the U Mortgages of the world, or, Mike Cox up in Wisconsin, Jamie Cavanaugh out, and Brad Rice out in California. Like, I'm sure
Go
you too.
Rascal in New
I'm sure
York.
Go Rascal in New York too. Like, all of you guys built out those processes, built teams and all that. So any producer that, from, your $1 million a month to, your $100 million a year producer should be able to plug in and have the same or better experience than what you're used to in retail. It's just a matter of making that right choice and doing your due diligence. But of course, if you're going to start your own shop, that, obviously can be, if you're a big, I actually, I'll never forget a guy, I'm not going to name him because I don't know if he would appreciate this, but I helped him become a broker, and he was like, I think he's about a $50 to $75 million a year producer. He had going back and forth between joining my shop, at least to start, or starting his own. And he was like, I gave him the pros and cons of both and all of that. But, I was like, this is more of a philosophical decision for you at the end of the day. Like, do you want to be a business owner and own your own business, create, completely your own brand, all of that, and build that legacy? And ultimately that's what he wanted. So he decided to start his own shop right off the bat, coming out of the banking world. About 4 or 5, 6 months in, roughly, or so, he came to me and was like, when you're having discussions with people that are like producers, tell them don't start their own shop right away and join somebody else.
Evan.
Like,
don't
at
be
least
such a
learn,
nice guy.
yeah, at least learn how to be a broker first before
Sure.
go branching out. And like, for me, like, everybody I talk to when they join, also, I'm like, if you have dreams of opening your own shop, I'll help you. I'll mentor you, and we come up
Very
with
cool.
some kind of plan that makes sense for you to start your own shop. Like, my belief is that, like, because I had a little bit of a light bulb moment this year and late last year, is like, I quickly I started Epic Lending in very early 2019, and we quickly got to, like, last year we closed in 2021, our second full year, we closed $275 million in volume and had about 50 employees or so. And I'm like, this is cool and all. I was like, but what am I doing? Like, at least to me, I felt that I was kind of moving away from what I believe a mortgage broker should be, is local in their community. The owner is local and present in the community and are a part of the community. They network with other small businesses in their community and lift each other up. That, kind of like what we do in AIM with each other. That is what I believe a mortgage broker should be. Like, I should have, like, it should just be Philadelphia mortgage brokers at the end of the day that are doing business in Pennsylvania, New Jersey, Delaware, and Florida, because it's that kind of hyper local. And I'm 10 minutes from the bridge to Jersey, so you can't license in just Pennsylvania.
Fair.
But that's kind of what I believe a mortgage broker should be, is that smaller shop. And you can dominate your local market. You can, get 50 loan officers in. I could have built Philadelphia mortgage brokers up to being a 50 LO shop right here in local Philadelphia. There's tons of great loan officers in this market. I just decided to go to more of a national platform because I was involved with the Arrive project, and I was like, holy shit. I was like, sorry, I don't know if I'm supposed to, I'm not allowed to swear. I'm a Jersey boy. I can't help it. It just comes out sometimes.
One strike.
Getting involved with the Arrive project and seeing what it could potentially be, I'm like, wow, I could really build a national platform for brokers to plug into. And my thought process behind that had kind of changed. And obviously Epoch OS, when we get to that, was a large part of my.
Let's talk about it. I think now's a good time, because I think when we talk about lack of internal support and, what brokers could use to possibly provide more support and focus on their loan officers and not deal with so much back end stuff. So it sounds like it's a great segue into Epoch OS. Tell me more.
Yeah, so of course, talk about Arrive, best LOS in the market, but it's an LOS. It's not a tool meant to manage like everything outside of that loan process. So that's where everything wound up being kind of disconnected. So like, if you wanted, for your accounting, you got to, you probably QuickBooks is what most people use.
Yep.
You got, and then, for tracking everything, all of you're pretty much just left to Excel spreadsheets. There's no system out there at all. There's no accounting platform that's specific to our industry. You can't really configure it to talk to the loan data and all of that. So, and payroll, I was like, calculating commissions for your loan officers. It's terrible. And I experienced all those growing pains myself, growing really quickly as a mortgage brokerage. And I'm like, damn, I wish there was a tool. And just like slowly, like the pieces started to connect together. And I'm like, why don't I just build this all encompassing tool to manage all of the business, all of the accounting, finance, performance metrics, commission calculation, automation, data visualization of, maybe giving you insights on where you're supposed to go do more business, and marrying your bank data or your financial data and your bank data with your loan data, and it's combined. So how you do it with QuickBooks today. You got to wait for that transaction to hit your bank account. You download it, and then you're like, what the hell is this? What is this transaction for?
What loan?
Like, which loan is it for? Then you got to you don't, sometimes when you do a lot of loans and you got all around the country, it's really tough. You don't really have that central place. If you are that local broker just in like one state and all, it's not so bad because you're physically depositing the check, all that, but it's tougher when you're out there. All throughout the country. But the idea is that once that wire or that check hits your bank account, it already knows what transaction it's for. It's already going to split out that revenue, credit report, appraisal reimbursement, whatever that comes all on that one check. And it's going to automate all of that stuff. And then of course it pushes out to automating commission for the loan officer, calculates the recovery of draws if your state requires it, or if that's what you do. Manages expenses. It reduces it deducts for overrides for LOAs or processor file, like does all of that stuff and automatically. So I used to have a person that I was paying, 40 something $1,000 a year, fresh out of college, and she was probably spending at least 10 hours a month just on payroll.
Yeah.
At a minimum. Probably more
Yeah.
than that. Like, I don't even know.
Yeah.
Like, she's just manually
Every 2
manipulating.
weeks. Yeah, probably.
Yeah, and she's
5 hours at least.
manually manipulating spreadsheets for every single loan officer and all that stuff. The loan officer didn't have any visibility into it unless you like exported the spreadsheet and sent it to them or whatever. Now I have a way that, not only does it calculate it, the loan officer gets their own login so they can go in and see their commission reports and see historical performance and all that too. So it's something for the loan officers to be able to log in and use as well. And the vision on the loan officer side of things, if you don't have any plans on, being a broker owner yourself, is that there's going to be like accountability tools in there. And that could be particularly, I know that, with mortgage marketing animals, like they're very big on that kind of thing of tracking your activities, I'm sure, and all that. I've never been in it myself, but I assume that's the way it works. So I want to have that all. I want to have that all. Yeah, I want to have that all systemized in the platform for the loan officer, so it helps them too. Then it goes way more. It's basic for those of you who are familiar with how business tools and all that. It's essentially an ERP for mortgage brokers that handles all.
What
of
is that?
Stuff.
I'm not familiar with that.
It's an enterprise resource planning or something like that is what it says. So like your NetSuites of the world, your Workday, all those really big expensive tools that people pay, tens of $1,000s a year at least for businesses. I'm
very
basically
cool.
building from scratch.
That's very exciting for our channel. I think you're gonna do well with that. I think we can all use something like that. And the fact that you're a mortgage broker building it means I imagine you'll be very similar to Harish, where you'll probably do bi-weekly updates and you'll take feedback and you're cut from the same cloth. What's your best guess at when this will be live for other brokers?
Believe it or not, the commission part of it is going to be, we're trying to launch it next week. We'll start onboarding people.
Good timing.
That part of it is done. All the other stuff as far as accounting and all of that, that's the next phase of it. But I felt like the commission, that's probably the stuff that we spend the most time on as broker owners or admins, is the payroll part of things. So that was the problem I wanted to tackle first, because I always thought it was the biggest time waster.
I agree.
For us. So
totally.
Tackle the most time consuming problem first, and then go from there. So I actually saw a tweet that I just posted on Facebook last night. I think he's an entrepreneur, just randomly saw it on my feed. It said, build a startup around a problem you've personally experienced for customers you understand, and you'll go farther than 99% of entrepreneurs. So
there you go.
Epoch OS is essentially the culmination of every problem that I dealt with.
You banging your head against the wall.
As a broker. Yeah, I've been a broker owner now for 4.5 years now. So
4.5 years.
Yeah. Mm-hmm.
Cool. EpochOS.com, I'm assuming, or
Yes, website is not launched yet.
Okay.
So you won't see anything when you go there. But
who needs a website?
I do have the Facebook page set up. There is a group. There's a Epoch OS user group that I set up, so anybody can join that group. You don't have to be a broker if you just want to, follow along with all the updates and all that. And basically, anybody in the industry is welcome in there.
Awesome. Let's get to this last misconception. We had one more, and it is that the mortgage broker channel is just simply too fragile of a channel. It's disjointed. Sure, we're having a little renaissance, a resurgence, great rates right now. Definitely, like a lot of people coming to our channel, but what is the channel? It's all these disparate, like little mom and pop mini brokerages all over the country. And it's just fragile and won't have kind of long lasting kind of legs to really bolster something and get back to what we used to be. I mean,
Yeah.
what do we got, Evan? What do we got that we didn't have 5 years ago that has just totally transformed this channel?
I mean, the biggest thing is AIM for sure. I mean,
Yeah.
the community we've been able to foster of just people that are supposed to be competitors are all
Mhm.
working together to get better together, and promoting the benefits of the broker channel. I believe personally that every independent originator should be a broker, unless you are doing products that we don't yet have access to, like, really good jumbo or a doctor loan or something like, those really niche
Fair,
products that most loan
fair.
officers don't do. But other than that, like, I don't think that there's a place for distributed retail, personally. I'm not going to obviously get into bashing retail, but I believe that, small business is the bedrock of our country, our economy, and I want to foster that. And I think AIM does a really, really good job of supporting the little guy. And then that's the whole idea behind Epoch OS too, is to make it more comfortable to own your own broker shop, so you can go out there and do what you do best and do loans. So I think, then you got your Arrive just came within the last few years. Again, we keep mentioning, but fantastic LOS, that
It's a game changer. It's true.
blows any
From a technology standpoint, it will be
and
here.
people have gone to that from every LOS pretty much, because
Yep.
if you're going from
Yep.
retail, you've used a lending QB, your Encompass, your
Calyx.
mortgage cadence, whatever it is that you're coming from, you go to Arrive and you're like,
Totally agree.
this
We've
is
got
what
1,000.
this is what it's supposed to be for an originator. Of course, like a retail lender couldn't go out and get it because it doesn't have all that back end stuff that you need, and all the underwriting tools and all that. But we don't need that as brokers. So now we have a tool that was built specifically for us and designed in a way it's supposed to be. So between Arrive and between Epoch OS, and then all the other great partners out there that are all coming together, a lot of the way through AIM, because I'm a vice chairman of the partnerships committee as well for AIM, and part of what we do is try, and what I'm going to do with Epoch OS is try to get all of the vendors to kind of work better together. You've seen how that can really work well between companies like LeadPops and Verse.io. Like, they went and established a partnership, and they built that really seamless way to generate the leads, and then somebody's communicating with them right away. So,
And I think that's
you can see that kind of magic. Like,
totally.
I would love to partner with strategic compliance partners, because I can tie in all the compliance stuff into my system as well through their offerings.
Right.
Because obviously I don't want to get into compliance.
Yeah, I had Brendan McKay on, I think the last podcast, and we talked pretty exclusively about AIM, but it was really only about everything they're doing with government affairs, and that's another level of game changing.
Yeah, can't even get into that.
I went to DC. We don't have time for that.
I was in DC. I was in DC for the launch of the backpack, and it was really cool. Being able to see that and be in DC and exceed all expectations. So yeah, that's just another thing, is just making sure that we have that representation on Capitol Hill, so that a 2008 type event doesn't happen again, where we're basically used as scapegoats.
Totally.
But that also is kind of, we have a big responsibility as brokers to make sure that we're running ethical and compliant shops, because it will happen to us again if it's found that loan officers are violating, or broker shops are violating really basic federal guidelines and all of that. So nobody likes to talk about compliance or regulations or anything like that, but it's really important for brokers to be on top of that and making sure that we're never put in a position where our reputation is damaged by anybody.
Yep. And I think AIM, that's the beauty of AIM as well. It's a built-in resource for education around all this, and you're not forced to have to read through a manual or whatever. You've got long-standing brokers who've been doing it a while. I've owned a broker shop since 2006, different versions. And so I've been through it all, seen audits, I've been through, crash
And you're in New
booms and
York, which is
crashes.
probably the
Well, I've only
one of
been
the
in New
most
York since like 2013, but correct.
wow,
Yeah, right.
that's still 9 years, and
I
it's
know. I
not an
know.
easy state to
Right.
deal with in terms of regulators.
Exactly. Right. And so it's just, I'm a phone call away from someone to just ask questions. Hey, I'm setting up a broker shop and this versus, frankly, a lot of these things, you try to go to an attorney in New York and get a straight answer, and you don't always get one. A lot of this stuff can be a bit vague. Like, what's my first audit going to look like and whatnot? And again, AIM has just absolutely galvanized our channel and brought people like you and me to this group that gives so much to us, and we're so excited to give back. I remember I called you, I think 2 years ago, asking about how you operated with two different companies, and getting licensed in different states. We spent an hour on the phone. I don't think I knew you then, and you were probably busy as hell. And I wouldn't know you if there wasn't AIM. I wouldn't have found you. That's kind of the
I
point.
don't
This
think so.
misconception is our channel is fragile, it's disjointed, it's broken up. How do you know? AIM has brought us all together, and like we owe so much to AIM for that. And so, bam, I think we pounded that last misconception that our channel is too fragile. That's
We
the
sure
furthest from
did.
the truth right
And
now.
it's continuing to grow. And I believe that, like I said, when I said that I believe that every independent originator should be in the broker channel. Once we get back to that 50+% market share, we're going to have
Yeah.
even more products under the sun. Our rates are going to be even better. And lenders are going to be forced to compete more. And I think that the best is yet to come for the broker channel personally. And anybody that's joining right now is still kind of like an early adopter,
Yep.
because, 50%
Yep.
of them are still in distributed retail. So, and I think a
Yep.
lot of them are going to start, at least I'm seeing it over the last few months. It's reported there's about 800 or 900 originators a month coming over to the
Come
broker
to the
channel.
broker.
Yeah.
Cool. Love it. Good stat. Awesome. Well, this was great. I think we got through these misconceptions well. Thanks for tag teaming them with me, Evan. If you guys liked what you heard on this podcast we led today, please give us a follow, give us a review, and perhaps share it with a few other loan officers in your community. We're going to keep bringing more good content here. I want to thank Evan again for coming on, and we will catch you guys next time on the Mortgage Broker Podcast, powered by the Mortgage Marketing Animals. See you, Evan.
See ya. Thanks for having me.